right, so in subsequent classes we'll do more. We'll go deeper into it, as it were. That's what I mean. So we're just going to open it today. So price action has to do with candle formation. So price action has to do with candle formation. When we say price action, we are talking about candle formation. Candle formation. So when you pick a candlestick, and then you look at the formation of that candlestick, it tells you a lot about what happened in that time space. Remember that whenever you see a candlestick, that candlestick was formed in a particular period of time, in a particular time frame. So we have a daily, we have a 1 minute time frame, 5 minutes, 15 minutes, 1 hour, and so on and so forth. So every candle is formed within a particular time frame. So, and when you look at that candle, it will tell you a whole lot about what's going on in the market. It will tell you whether the bulls are taking over and the market is about to buy, or it will tell you if the bears are taking over, if the market is about to sell. So this is what we mean by price action. Price action is basically taking a candle, doing the analysis of that candle, or doing the analysis of a series of candles to help you determine, or help us determine what is likely to happen next going forward, right? So let's look at something. Let me see if I can find a candle here. So someone's posting something. Let me see. Who's posting this, please? You'll be able to see screenshot. Okay, so yeah, price action, like I said, it's basically candlestick formation. How did the candle form? So let's look at a particular candle. Let's pick a candle and try to understand the candle, right? Now, when you look at these, candles now, look at these candles, look at these. Now, we are on GBP AUD and we are on the daily chart, right? Now, when you look at this move now with these candles, it tells you something about momentum. It tells you about momentum, and we're on a daily chart. It means that for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, trading days, which means for a whole space of about 2 weeks, market has been buying. So when market is buying like that and market is moving, it keeps telling you, it tells you what the momentum in the market is. You see green candles, it tells you that these candles, market is moving in a particular direction. Then, after that happens, you start to see this. So let's pick this candle now, for example. Let's pick this particular candle. So that candle is a particular candle in the market, right? It has a name. Now, we're not going to go into all that in depth right now, but this candle has a name. Now, this candle, when you look at how this candle was formed, look at the formation of this candle, it will tell you something about what is likely to come after that candle. Because remember, guys, whenever we are in the market, what we are trying to do is we are trying to predict what will happen next. So we are using one understanding that technical analysis gives us is it helps us to use previous price activity, previous price action to determine future price activity. So we are trying to determine future price activity, which is our trade, which is where we are trading. When we enter a trade now, when I enter a trade right now, my goal is for that trade to play out in the future. And the future can be in the next 5 minutes. It could be next 1 hour. It could be in the next 5 hours. But that's still the future from now. But what I'm trying to do is I'm trying to take this, I'm trying to use the data I have already. I'm trying to use the data I have already in the market, which is the which is represented in these candles, right? The data I have already, which is represented in these candles, to make a decision as to what I want to do next, as to what is likely to happen next. Is the market going to be selling next? Something on the chart needs to tell me. If the market is going to be buying next, something on the chart is going to tell me that, right? So that's what I'm trying to do with every candle that passes. I want to be able to read that candle. I want to be able to read not just that candle, but I want to be able to read a combination of candles to help me make a decision as to what price is likely to do going forward, right? So when you look at this candle now, let me try to zoom in here. So I look at this candle, you will see that this candle has a long wick. It has a body. Now, first of all, this candle is red. And when we see a red candle, we know we are dealing with a bearish candle, right? We know we are dealing with a bearish candle. Now, when you look at this candle is a bearish candle. This candle has a body that is quite small. This candle has a body that is quite small. It's not that large. Then we have a long wick at the top. We have a long wick too at the bottom, but the one at the bottom is much shorter than the one at the top. Now, there's something to understand, right? Whenever you see a candlestick, whether the candlestick closes as a green candle or as a red candle, there is always buy and sell volume in every candle. There is always buy and sell volume in every candle. Now, remember, every candle here represents price action within a fixed time frame. The formation you see on every candle, on any candle here, is price action, which means what price did over a fixed period of time. Now we are on a daily chart, right? Now, what you'll see here on this green candle now is what happened over the course of one day, what price did over the course of 24 hours, right? Now, so anytime you see a green candle, what happened there is that there's been buy and sell volume in that time. There's a lot of buy volume, there's a lot of sell volume. But the reason why the candle ends on green, the reason why the candle finishes as a green candle is because buy volume overwhelmed sell volume. Buy volume overwhelmed sell volume. So let's say there's a $2 billion worth of volume in this period of time. That's an example, because this market is definitely more than that. But let's pick this candle now. Let's pick this candle, for example. Let's pick this candle. Now, in the period of time that this candle was formed, which is 24 hours, in the period of time, there was, let's say there was $2 billion worth of volume, $2 billion. $2 billion worth of volume in that period of time, right? $2 billion. Now, probably there was some 500 million of that volume towards the sell side. So there was $500 million of volume, or 200 million, $300 million of volume that was selling, thinking that price is going to come down here. But what happened is that the rest of the 1.8 billion was in the buy direction. That's why the candle ended as a green and literally wiped out those who were selling. So what happened here is that the buyers wiped out those who were selling. The buyers wiped out those who were selling, and then the candle ended as a bullish candle. In that time frame, those who were selling lost their money. They lost money on these trades. But those who were buying made money. But there was more buy volume. So you see that this candle closed and then kept going up. It kept going up. It kept going up because there was a lot of volume a lot of volume in the market that's thinking that price is going to keep going up. So every candle you see is telling you that it's like a tug of war between buyers and sellers. It's like a tug of war between buy volume and sell volume. Buy volume and sell volume. But the candle that closes, when the candle closes, it gives you an idea who are those that overwhelm, who are those that overcame the market at that time. So let's look at this initial candle we're discussing. we see that this candle has a green body, sorry, a small red body, but a long wick. Now, a long wicks usually tell you something in the market. Wicks usually tell you places that price had been, but did not stay there. So when price got there, price did not stay there. Price went there, but did not stay there. That is the reason why you're seeing it as a wick. Price went to touch that point, but did not stay there. It's more like you are walking, you are taking a walk, and then you're walking from one point to another. And let's say it's a floor where you can actually, where your footprints can actually be seen. It's not like a concrete floor or like a tiled floor. It's just a muddy floor. Let's say it's a muddy floor, and then you are walking. You walked from one place to another. Someone can come in there and see your footprints, but the person can't find you. You are not there. You passed through that place. You passed, and then the person comes there, the person can't find you, yet you were there. That's what wicks are in the market. That's what wicks, all these wicks and shadows, that's where they are. That's the way they are. So it's more like you can see the footprint of price. You can see where price went to, where price had been, yet price did not stay there. That's the meaning. That's the reason why you can see that price was here, but the price didn't stay there. So that's telling you something. So if price went to this area, and then price now came down. Remember, when price was moving up, this candle, when this candle was here, it was a green candle. When price was here, it was a green candle. It was not a red candle. It was a green candle. Then it moved up the way to this point, and then started selling. It now sold and sold and sold, and the green candle that was initially forming now closed as a red candle. What that tells you is that initially there was a huge amount of buy volume, which means there were a lot of buyers initially. That's why price moved up initially. So as price moved up and moved up and moved up and got to a certain point, sellers began to step into the market. Sell volume began to step into the market. Now, when we say sellers, it doesn't mean the number of sellers or the number of buyers. We are talking about volume here. There could be 1 million people who come to the market with $100. 1 million people who come to the market with $100 each to trade with. And all of them is buying. Every one of those people are buying. Every one of those people is buying, right? That's $100 million in volume, right? 100 people buying, 1 million people coming with $100. That's $100 million in volume. But one person can come into the market and deploy $2 billion towards the sell direction. One person can come into the market and sell this trade with $2 billion. See, because he has access to the money. He's an institutional trader. And because he's an institutional trader, he deploys $2 billion into the market. He deploys $2 billion into the market, and then what happens? The market will sell, even though there's 1 million people who are buying. So we're not talking, when we say number of buyers, number of sellers, we're not talking about numbers. We are talking about the amount of money involved, the amount of volume involved. So what you see here now is that price moved lower. Price moved lower because sellers stepped into the market. Sellers stepped into the market with a huge sell volume. Sellers stepped into the market with a huge sell volume, so the market moved downwards. So this candle now, going back to price action, this candle now is telling us what happened in that period of time. So when we see that this candle closed like this, and then we can already see that sell volume entered the market massively, pushed a buy candle, a candle where there was a lot of buyers. It pushed it down now to the point where it finished at a sell point. It finished as a bearish candle. That tells us that the bears are very likely in charge now, which means that the next candle is likely going to sell. The next candle is very likely a sell candle. Why? Because we can see that sellers are taking over the market. since sellers are taking over the market on this candle and market closed, we know that volume, the chance that there's going to be a huge sell volume, the chance that the market is going to sell after this candle closed is very high. It's excellent. It's probably 80% or more. The market is going to sell. Now, of course, there are other things you can look at in the market that can tell you if you should be selling immediately or not. But basically, from the perspective of price action, this is what this candle tells you. From the perspective of price action, this is what this candle here tells you. That's the clarity it gives you. So you know what is going to happen next. All right. So guys, this class is it's an introductory class. I'm going to put an end to this class now. We are going to continue with this session in another class, right? We're going to continue with on this session in another class, all right? So yes, all right. So do we have any questions from what I've said now?